I want you to think about someone you know. A coworker, a neighbor, maybe a cousin. Nice house, new car, takes at least one vacation a year, posts the pictures, looks like they've figured it out. Now here's what I need you to sit with. There is a better than even chance that person is one missed paycheck, one medical bill, one layoff notice away from total financial collapse. Not next year, right now, today, as you watch this. And here's what makes it genuinely terrifying. They might not even know it themselves. According to the Federal Reserve's most recent report, 37% of Americans say they could not cover a $400 emergency without borrowing money or selling something. Not people in poverty, average Americans, people with jobs, people who look fine. So here's the question that should be haunting you. If so many people are secretly drowning, how is everybody still affording the lifestyle? How is the Tesla still in the driveway? How are the vacation photos still showing up on Instagram? Where is all this money coming from? Today, on the Middle Class Crisis, we're pulling that thread, and what unravels is going to change the way you look at every single person around you, and honestly, at your own bank account.
Let's follow the money, because the numbers tell a story that mainstream finance is not telling you, and once you hear it, you can't unhear it. U.S. credit card debt just crossed $1.36 trillion. That is an all-time record. And the average interest rate on that debt just hit 22%. 22%. That's not a financial product. That's a trap with a logo on it. But okay, most people know credit card debt is bad. So your first instinct might be, this is just a spending problem. People are buying too much junk they don't need. Cut the lattes, skip the vacations, stop impulse shopping on Amazon at midnight. Except here's what the data actually shows. When researchers break down where the debt is coming from, discretionary spending, your restaurants, your streaming, your clothes, accounts for less than a third of the increase. The majority of the new debt? Groceries, utilities, gas, insurance, the stuff you cannot cut, the stuff you need just to exist. So it's not that people are frivolous, it's that the actual cost of a basic, ordinary, middle-class American life has outpaced income, and credit cards have become the gap filler, the bridge loan that never gets paid off, the thing holding the whole illusion together. Okay, so now you think you see the answer. It's inflation. Prices went up, incomes didn't keep pace, credit filled the gap. Cut spending, inflation cools down, problem eventually solves itself. Nope, because what most people miss is that there are two completely separate debt explosions happening simultaneously, and only one of them is visible. Above the waterline, credit cards. Everyone knows about those. Below the waterline, a whole shadow economy of debt instruments specifically designed to feel like they're not debt. Buy now, pay later, BNPL. Apps like Affirm, Klarna, Afterpay. These let you split any purchase into 4 easy payments with 0 interest, and they sound completely harmless, until you realize that 43% of BNPL users have missed at least one payment, that the average BNPL user has 4 active plans running simultaneously, that these loans don't show up on most credit reports, so people stack them invisibly with no guardrail, no warning, no alarm. Then there's auto loans. The average monthly car payment in America just hit $738 for a new vehicle. $738 a month for a car. And the average loan term? 72 months. That's 6 years of payments on an asset that loses 20% of its value the second you drive it off the lot. And right now, auto loan delinquencies are at the highest rate since 2010. Medical debt? 100 million Americans are carrying it. Not the uninsured, people with insurance, people who thought they were covered, getting blindsided by out-of-network charges and surprise bills. And here's the head fake that should genuinely mess with your head. All of this, the credit cards, the BNPL, the car payments, the medical bills, it's all technically legal. It's all technically voluntary. Nobody held a gun to anyone's head.
And the financial industry will tell you that with a straight face. These are choices people are making. But here's what they won't tell you. The entire system has been deliberately engineered so that living a normal, modest, middle-class life now requires debt. Not luxury, not excess. Normal. A used car, a decent apartment, a doctor's visit, a kitchen appliance when your old one breaks. The infrastructure of an ordinary life has been financialized, converted from things you buy into things you finance, and the financial services industry collects a toll every single step of the way. This is not a personal finance failure. This is structural, and it means that the lifestyle you are watching your neighbors perform, it's not funded by income, it's funded by debt. And the whole thing is one economic shock away from coming apart at the seams. All right, now that we've established that the ground is crumbling, let's talk about how you stop being one of the people standing on it. There are 3 moves: concrete, doable, and non-obvious. These are not in your budgeting app. Let's go. Move 1. Run a stripped net worth audit. Most people have zero idea what they're actually worth because they've never looked past the surface. Here's how to do it in 20 minutes. Write down every asset you own, your home equity, retirement accounts, savings. Then write down every liability: mortgage balance, credit cards, car loans, student loans, BNPL balances, medical debt. Subtract liabilities from assets. That number, your real net worth, is your true financial position. Most middle-class households who do this for the first time find that their net worth is somewhere between uncomfortable and genuinely alarming. But that's the point. You cannot fight a problem you refuse to measure. The audit is not punishment, it's a flashlight. Move 2. Identify and nuke your phantom payments. Phantom payments are monthly obligations you made a one-time emotional decision to take on, and now they auto-draft forever with no second thought. Car payments, BNPL installments, financed furniture, gym memberships, store credit cards. List every single recurring payment coming out of your account. For each one, ask, if I had to re-decide to sign up for this right now, today, with what I know, would I? If the answer is no, that's a phantom. Kill it. Every phantom you eliminate is permanent monthly cash flow you get back, compounded for the rest of your financial life. Move 3. Flip the debt payoff order. Use the avalanche, not the snowball. You've probably heard of the debt snowball. Pay off the smallest balance first for the psychological win. It feels good. It's also mathematically the most expensive way to get out of debt. The debt avalanche, targeting the highest interest rate first, regardless of balance size, saves the average middle-class household thousands of dollars and months or years of repayment time. It's less emotionally satisfying in the short run. It is dramatically more effective in the long run. And in a debt economy charging you 22% APR, the math matters more than the feeling. 3 moves: a net worth audit, phantom payment elimination, and the avalanche. None of them require a raise, none require a side hustle. They require clarity, and clarity is free. Here's what I want you to take away from this, and I mean this genuinely. If you're watching this and feeling that pit in your stomach feeling, that's not weakness, that's clarity. That feeling is your brain finally getting honest information about a system that has been designed with incredible precision to keep you confused. The lifestyle debt economy doesn't work if people see it clearly. It works because the monthly payment feels manageable, because the BNPL app makes the checkout feel painless, because everyone around you seems to be doing the same thing, so it must be okay, right? It's not okay. And the fact that you're still watching this, that you're willing to sit with the uncomfortable data instead of scrolling past it, that already puts you in a completely different category than the people who are gonna wake up 10 years from now and wonder what happened to their financial life. I'm not here to sell you a course. I'm not here to push you toward a financial product. This channel exists because the information that actually changes people's financial trajectories The structural stuff, the systemic stuff, the non-obvious moves is buried under a mountain of noise, and you deserve access to it. Straight, no chaser. Before you bounce, here's your one action item for this week. Just one. Open your bank account and your credit card statements right now. Count your total number of active monthly recurring payments. Every single one. Auto drafts, subscriptions, loan installments, BNPL payments, all of it. Write that number down. If that number shocks you, good. Shock is information. Shock means the system was working as intended, keeping you from looking at the full picture. Now you're looking. Now you can actually do something about it. Now, if this video shook you up, the next one is going to hit even harder, because here's something we haven't talked about yet. Nestled inside that list of monthly payments you just counted, there's a whole category of charges that are specifically engineered to be invisible, to hide in plain sight, to grow quietly in the background of your financial life while you're focused on everything else. We're talking about the subscription economy, and it is financially wrecking people in ways that are so sneaky, so normalized, so baked into everyday life that most people genuinely don't register it as a problem until it's already drained them. Next video, the subscription economy is financially destroying people. Monthly payments turned ordinary life into permanent debt, and the companies running this model have spent billions of dollars making sure you never notice until it's too late. We're exposing the whole playbook. Subscribe, hit the notification bell, because in an economy designed to keep you broke, confused, and too overwhelmed to fight back, the middle-class crisis is the one place you come to see the full picture. And seeing the full picture, that's the first unfair advantage you've actually got. The panic is real, but so is the way out. See you in the next one.